So you've decided to buy a home. This will be one of the most exciting events of your life and will probably be the most expensive and important purchase you'll ever make. Hi, my name is Teresa Payne and I'm with the Department of Housing and Urban Development. As part of HUD's commitment to help consumers navigate the home buying process, we've put together 3 short videos that will cover what you should expect and what you should be aware of when buying a home. These videos will address shopping for your home, shopping for your loan, and closing the deal. Knowing what to expect will help you make informed decisions throughout the process and will make this a very rewarding experience for you. Today, we will focus on shopping for your home. After all, you're not just buying a house, you're making a home. To make you more aware of important aspects of the process and what to expect, we'll discuss your financial situation, working with a real estate agent, and what happens once you find the home you want to buy. There are 2 very important questions you need to answer before you begin. First, how much can you afford to spend on a home, and how much of a mortgage payment can you afford each month? Let's spend some time discussing your finances and credit. First, your finances. Be realistic about your expenses. Don't let anyone pressure you into buying any home, let alone one you can't afford. A licensed mortgage broker can also work with you to figure out how much of a home you can afford. You should consider the following. Do you have a steady flow of income? Do you have savings for a down payment? Do you have other debt? How is your credit? Having a clear understanding of your financial situation will help you figure out how much you can afford in a monthly payment. Let's talk about your monthly mortgage payment. When determining a monthly mortgage payment that you can afford, you should take into account your current monthly expenses, costs that may impact your monthly mortgage payment, and expenses that are related to the new home. Your current monthly expenses may include expenses that you pay for now and will continue to be responsible for after you buy a home, like a car payment, student loans, and credit card bills. How much do you have for a down payment? Money you will put down towards the purchase of a home. If your down payment is less than 20% of the sales price, you'll probably have to pay for mortgage insurance, and that will increase your monthly mortgage payment also. When you buy a home, you'll be responsible for paying property taxes and homeowners insurance. These items can be paid as part of your monthly mortgage payment. Homeowners association fees are fees that you may have to pay if you buy a home in a planned development. You should also take into account expenses that come with buying your home, such as repairing or replacing broken appliances or more expensive repairs such as replacing your furnace or roof. You will also have to factor in regular maintenance expenses such as cleaning out the gutters and basic upkeep. If you purchase a condominium, you'll be required to pay an additional monthly condo fee. And don't forget that you will have other expenses such as utilities, phone, cable, and possibly internet service. Another important consideration is your credit. Get a copy of your credit report and review it to make sure it's accurate. Lenders will rely on your credit report and credit score to determine whether to make you a loan and on what terms. The law allows every person a free credit report each year and permits consumers to dispute inaccurate information within their credit report. Your cost of borrowing money will be affected by your credit score, and your credit score is based on your credit report, so make sure it's accurate. So we've talked about your financial situation, you've reviewed your credit score, and you're moving right along. A real estate agent can help you with the next step, finding your new home. A real estate agent can help you to search for houses matched to your needs, show you those houses, and tell you about neighborhoods and schools in the area. The right real estate agent can be a great source of information and can do a lot to help you through the whole home buying process. You should be aware that real estate agents can act in different capacities or agencies. A buyer's agent is hired by a buyer to represent the buyer's best interests throughout the transaction. Buyers can pay directly through a negotiated fee, through the seller, or by a commission split with the seller's agent. A seller's agent is hired by and represents the best interests of the seller. This relationship usually is created by a listing contract. You found the home you want, now what happens? Your real estate agent will assist you in preparing a purchase contract based on the terms you're willing to offer. All terms in the purchase contract are negotiable. There's no contract until the buyer and the seller agree to each and every term. So what are some of the major terms in the purchase contract? Sales price is one of the most important items in the purchase contract. Contingencies. Contingencies are conditions that, if not met, may permit you to cancel the contract. There are several types of contingencies, such as obtaining financing, home inspections, and other terms you identify. One of the most important contingencies is for financing. If you have a financing contingency in your contract, you may be able to get your deposit back if you cannot get a mortgage at or below a certain interest rate or through a specific loan program. Other important terms in the contract include the move-in date, as well as which appliances and personal property will be sold with the home. You will most likely have to provide an earnest money deposit, which is money you will give to your real estate agent to hold in an account when you make the offer. This deposit will show that you're serious about buying the home, and it will become part of your down payment if your offer is accepted. If the seller rejects your offer, the earnest money deposit may be returned to you. If you decide not to go through with the deal after a contract has been signed by you and the seller and all the contingencies have been met, you may forfeit the earnest money deposit. Let's assume now that the seller accepts your offer. What happens next? First, you should always have a home inspection. Hopefully, you included a provision in your contract that gives you the right to cancel, renegotiate the sales price, or require the seller to make repairs if you're not satisfied with the results of the inspection. Many buyers elect to pay for this inspection so that the inspector is working for them, not the seller. Second, even if your lender does not require additional inspections, you may want to have a pest inspection. These inspections will ensure that your home is free of termites, pests, and pest damage. We hope you enjoyed watching this video today.